Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is May 1st, Thursday. Happy May Day, everybody. We got a lot to go over today, so we'll jump right into it. We will begin with the jobless claims come out weekly. And last week we had 330,000 people applying for unemployment. We figured that would taper down to 320 because remember, for a while there we were averaging between 310, 320. And this week, boom, jumped up to 344. So pretty big jump right there. Obviously, we don't like to see that go in the opposite direction here. We got personal income for the month of March. So back in February, people were making 0.3% more. The forecast was 0.5%, and it jumped up 0.5%. So good things. People are making more money in March. And consumer spending, we got the opposite spectrum here. So we had a 0.3%. Again, so it's kind of even in February. Forecast was supposed to go up to 0.7 in spending, and it jumped up to 0.9. So people were spending a lot more than they were making, basically. We got the market PMI. This is the manufacturing numbers. So we had a 55.4. Anything above 50 is considered expansion, and remained the same. So no change in the PMI or manufacturing. And ISM, also manufacturing number for the month of April. We had a 53 point, again, anything above 50 is considered a expansion here. So 53.7%, and we were forecasting at 54.4, and it jumped to 54.9. So manufacturing does not seem to be any issue at this time. So we're seeing better numbers than we anticipate in manufacturing. In consumer spending, people are out spending more. So the negatives so far are jobless claims, and then we got construction spending, which came in at negative 0.2. Forecast was at 0.6. It came in at 0.2. So construction spending didn't come into what the expectations were. We figured with the winters gone, that maybe we might see some additional spending and hopefully more job creations in terms of construction. Also, yes, remember we had the FOMC announcement, so really no surprises yesterday. The market was kind of gearing up in the meeting in case there's any meetings, and basically, as you may have seen, the markets closed. Stock markets were down, whereas the bond market actually went up, which you'll see here shortly. But they continued the tapering of the bond purchases. They're up to 45, down to 45 billion. And they anticipate that to continue. We should complete that by end of year with that pace. There was questions about anything in terms of the interest rate hikes, and they basically that's still not clear as to what they're going to be looking at in terms of deciding when they're going to raise interest rates, but they don't see it in the near term. They kind of we had a negative GDP, or not a good number for GDP, came in at 0.1%. They dismiss it due to weather and think the economy will pick up, and things will kind of get better as the year goes on. So be cautious over the spring and summer, because right around July is probably going to be more of an important time that they're going to be reviewing these numbers. They want to see if jobs are being created, if we're going to be if the economy is going in the right directions, because when we get July, we'll get the first data or first look at the Q2 numbers to see where GDP is there, see how much it grew, because obviously it was disappointments ending 2013 at 2.6, and then just have 0.1% growth for first quarter. So be prepared longer term, medium to long term, for some volatility in that area. So far this morning we got mixed results, because we had mixed data. We have mixed earnings as well today, so it's creating the stock market a little bit of mixed. So let's jump over to the bond market, and sorry about that. So we'll just take a look at here, and sorry about that. I'm not sure why that didn't come up properly. So here's where we're at today. As you see, we had this nice rally. We're actually knocking on the 105 range, so we haven't been up there for quite a while, and obviously we're having a nice price improvement. So so far we're touching up, though. We're getting a nice improvement in the interest rate. So we'll have to kind of wait and see. That GDP, I think, kind of threw everybody for a loop and kind of hurt things a bit, and it's helping out the interest rates. All right, folks. Hey, thanks so much for watching. Tomorrow we'll have a big number. We'll have the jobs numbers coming out tomorrow, so we'll see the unemployment rate and how many jobs were created by the Bureau of Labor Statistics. So wait and see. Tomorrow will be a big day as well. Have a wonderful day and look forward to seeing you tomorrow. Bye.